AI is a useful and incredibly useful tool, but unlike others, I refuse to see AI at the moment as the final answer. In the crypto space, it seems as though the regulators want us to do all the due diligence for the consumer. So I don't think regulation necessarily builds trust.
Hello, everyone, and welcome back to the Horizon series by Being Crypto. I'm Genesis Hernandez, and in today's episode, I had the chance to speak with Chet Shah. He's the CEO of Wirex, a global payment platform bridging the worlds of crypto and fiat. Chet brings decades of experience in traditional finance and regulation, and he's now applying that insight to build a more resilient, transparent, and user-first crypto company. We talk about a lot, including why traditional banks still don't get crypto, or how regulation needs to evolve without overreaching, and what it really takes to earn user trust in a space that's still finding its footing. So if you're curious about where regulation, fintech, and crypto meet, where it's all heading, this one is for you. I'm here with Chet Shah. Welcome to the Horizon series. It's really great to have you here. Just to kick things off, please can you tell us a little bit about your background, your journey? Please tell me. I'm really curious about the journey about, through banking and payments. How does it it gets really involved in the crypto world?
Oli, good morning, and thank you very much for the kind invite to speak today. I've been involved in financial services for a very long time, 30 years plus, mainly in the traditional sector up until about 8, 9 years ago, where I then moved into the fintech sector, and then more lately the digital assets world as well. So my background has been predominantly in traditional finance within risk and compliance. But for the last 7, 8 years, it's much more focused in the fintech space, and a huge amount of focus lately in the last 3 years on digital assets and all the amazing opportunities that can offer.
No, amazing. So I understand that your career has been rooting into managing risk and then traditional finance, now in crypto. So one of my first questions is now that you see more you got this both side of both worlds, what is something that the crypto space doesn't get fully about risk management? Or maybe what does traditional finance maybe gets wrong when they look at crypto?
Well, I think to answer that question, you need to understand the context of traditional finance. By its very nature, there has been very little innovation in traditional finance for a very long time, and it's taken the likes of Monzo and Starling and Revolut as neobanks to really start adding innovation to the payment sector. As an example, traditional banks, by their very nature, are lending banks, and they take deposits and they lend money, and that's how they make their money. When it comes to payments infrastructure, they are years behind. They have legacy systems that are not integrated, and that's why you see neobanks taking the drive to market to make payments infrastructure, for example, very much simpler. When it comes to crypto, then what I've just described is tenfold. Traditional banks have an inherent suspicion of anything new that, if you like, may impede upon their monopoly of sorts. So crypto, in its purest sense, is seen by traditional banks with suspicion. But lately, what we've now seen is more banks looking much closer at the stablecoin space, for example, where they can utilize stablecoins to make their own banking rails smoother. Now, that's not the traditional banks innovating. They're just copying what the fintech drivers, what the neobanks have been doing. And that's why you find even now traditional banks don't fully understand the digital asset space. They don't fully understand the desire for customers to have frictionless and cost-effective payment rails. And this is why I think that the problem that most fintechs have, most neobanks have, and most crypto firms have with traditional banks is that lack of understanding. And unfortunately, that lack of understanding can also be applied to multiple regulators as well, who still see crypto with suspicion. And one could argue that they are now on the drive to over-regulate without fully understanding the benefits that digital assets can bring to the broader economy, but obviously to individuals as well. A good use case example is if I want to send money from my traditional bank in the UK to the States, it's going to cost me quite a lot of money in relation to what I want to send. So, it could cost me 20, 25 pounds. Now, for the fraction of that, I can send stable coins instantly to a friend or colleague, an acquaintance in the US. And I think that's where the traditional banks have failed to understand and grasp the technology, because I think part of that is because they are worried about their own business model.
Now that I hear you talking about stable coins and like maybe talking a lot about other platforms like for example Revolut, or the example that you gave us about sending money from the UK to another country. So it's like I wanted to ask you, how do you see the current state of crypto regulation globally? Because yeah, those platforms are yeah, they're really successful, but it's because they also handle a lot of compliance, and so like I feel like crypto is still working on that. So is it like crypto, is it settling into something more structured or still something more unpredictable for serious planning, talking about the state of regulation?
Thank you. Yes. So firstly, I think it's important to understand that regulation, proportionate regulation in the crypto space is very important. I'm not one of those individuals who think that it should be completely unregulated, simply because there is too much at stake for our business to be unregulated. However, the problem with a lack of understanding, as I mentioned before, with certain regulators means that they have a knee-jerk reaction to regulation. They instantly go for over-regulation rather than proportionate regulation. So unfortunately, what we're seeing across the globe is differing approaches to regulation, where in one jurisdiction, for example, Dubai, there is good regulation, proportionate, it's attracting business, it's protecting consumers, it's protecting the local economy, but the regulation applied is very proportionate. Conversely, one would argue that the introduction of MiCA in Europe is over-regulation. There are so many differing standards that must be met. Some of it making it incredibly difficult for smaller incumbents and smaller new entrants to that market. Is making it very difficult for them to actually operate. And one could also argue that over-regulation stifles innovation, and ultimately stifling innovation is to the detriment of the end user, the customer. And then again, another example would be looking at regulation in the US, where it's not very clear. They've just passed the Genius Act, which allows for stablecoin issuance. But again, there is multiple changes happening there. So from a global perspective, it's very difficult for a global firm to do business in multiple jurisdictions. But if we condense that down to what regulators are actually trying to seek to do, they're trying to seek to protect the consumer, obviously, but also making sure that firms such as Wirex, such as Revolut, such as Binance, etc., they act in a way where one could argue they shouldn't have acted in the past. So you can understand the regulator's desire to have that level of protection. But like I said, unfortunately, what I'm seeing is a knee-jerk reaction rather than a proportionate reaction.
Amazing. And thank you so much for giving all the information about, I mean, other countries, you know, like I think the only one that we're lacking, but you already talked about it before a little bit, it's the UK. And I want to zoom a little bit about it because the rules are even stricter. Like the FCA's crackdowns on crypto promotion have a really big shift. So since Wirex, I understand that is regulated there. Like, how have you been adapted to that? Like, what kind of internal changes you have to make to stay compliant? And also, if you can tell us a little bit about the team, because like you know, like there are like a lot of crypto, let's just say like blockchain founders that they also want to join that, but they are not sure. So I want to know, like, from your perspective as a CEO, how the team is trying to adapt to those changes.
So I'm not here to defend the FCA in the UK. However, they have been somewhat stifled in their approach by various inconsistent government lines, be it the previous government or the current government. And that's why the approach to regulation in the UK for crypto has been, again, it's been somewhat staggered. It's not been strategic. So the strict rules that you refer to simply apply to financial promotions at the moment. However, in the years to come, the FCA have already launched discussion papers and consultation papers on how they can have a crypto regime that both benefits the consumer but also encourages growth in the UK. But that's at least 18 to 24 months in advance. So the strict regulations the FCA have put in relate to financial promotions. So if you want to promote crypto to a UK resident, there are certain very strict, as you say, rules you must follow. But again, those rules, they sort of make sense simply because, you don't want individuals promoting crypto or crypto services based upon untruths, based upon speculation. Sometimes, we've seen in the past where firms do promote their services, they're not very clear, they're not fair, and they're not transparent in their promotions. So I fully support what the FCA in the UK are trying to do. However, as with everything, it's proportionate regulation that matters. And currently, I think they've got the balance just about right, but there is danger that they're going to slip into over-regulation again. In terms of other companies who are not based in the UK and wish to market to individuals based in the UK, well, frankly, they're going to have to put up with the regulation. If you want to service a jurisdiction that you don't have an entity in, then instantly regulators of that home jurisdiction are going to be suspicious, and instantly it's going to be rife with potential misconduct. So I think part of what the FCA are doing makes perfect sense. However, this is just a start. What we are really looking forward to seeing is how they are going to regulate our industry correctly and proportionately going forward. And we're just waiting for that, more details of that to come through.
Thank you so much. I really love that outcome. So in the end, do you think like these measures help building trust in the long run, or especially to the new users, or maybe is sometimes it getting a weight of innovation?
Yeah, trust is a really important but complex topic. So regulators seem to think that you can build trust with the consumer by having a mountain of regulation and endless consumer protection. But what that does, it then encourages the consumer to dive into a service or to pay for a product without, first of all, doing their own basic due diligence. Now, you would expect most adults, before they make any form of purchase, to do some basic due diligence. Be it an article of clothing, you'll try it on. Be it a car, you'll take it for a test drive. In the crypto space, it seems as though the regulators want us to do all the due diligence for the consumer. So I don't think regulation necessarily builds trust. I think what it does do, it could build an element where there is no risk premium, where a consumer can consciously make a decision of their own choice, then subsequently find out in 12 months' time that was the wrong decision and expect their money back. So for me, good regulation can help build trust, but regulation in itself is not the end driver for building trust. What does build trust is how a company behaves itself, how its staff behave themselves, and the culture within that company. So if you have a culture like some companies still do, where it's all about growth, where it's all about onboarding anyone with the minimum level of KYC and trying to sell, eventually that culture is going to break the business model and it's going to break any trust that's been built up. In Wirex, my aim as the CEO for Wirex Limited is you build trust with the consumer. Regulation is important, but actually the consumer doesn't know what protections they have. They don't read the consumer duty, which is 150 pages of stuff that they're expected to understand. It's up to us to build that trust with the consumer by treating them fairly, treating them well, but also making them aware of some of the risks, but ultimately not taking away the accountability from the consumer for him or her to do their own due diligence as well, which is incredibly important.
Yeah, definitely. I like that. I like that you brought that shift really because I imagine that like more than regulation and like to be like resilience platform is more than just I mean yeah regulation is more about like maybe technical infrastructure. So maybe I want to switch like just stop talking about regulation for a little bit and maybe wanted to ask you more about Wirex like maybe what do you think about like what it takes to build a platform that is truly resilient? Maybe something more cultural, operational, or even more human. I feel like that's something that's maybe more. Let's say like crypto platforms are missing, you know, like maybe somebody behind that. And I feel like you're also like building your brand persona, being here, building trust. That's something that maybe it gives like the users a more better, a different perspective, you know. So what else do you think it takes to be a resilient platform?
I think resilience is absolutely key to any platform, and building resilience is a mixture of um, having the right technology, having the right level of stress testing to be aware of any events that may happen, but it's also about the culture of the firm as well. I mean, culture permeates everything that any company does, and you know that includes the type of technology it deploys. That includes how seriously they take resilience. Now, there's lots of regulation around resilience. There's certainly in Europe. There's something called DORA in the UK. The FCA have issued operational resilience standards a few years ago now. But put that to one side. Why do you want a resilient platform? Well, first of all, you want to deliver what you're promising to your consumer. That's critical. And most businesses now are 24/7. So you've got to have a platform that can adapt as well. And in order to adapt, you've got to have a platform that's agile. But you only know when something is agile when something unexpected happens. That stresses the platform. So in Wirex, what our teams regularly do is stress test the platform. Yes, we comply with all the regulations and all the technology standards that are out there. And trust me, there are many out there that our teams have to deliver against. But fundamentally, what is most important is that the platform is stable, and then you continuously stress that stability and see what happens, because by then you will then, so that's the only way you can learn if there are additional controls, additional measures that may be required. And so we take resilience incredibly seriously in Wirex, because that's the backbone of our business model. Our platform is the backbone of our business model. So, you know, it's incredibly important that not only do we comply with multiple regulations around resiliency, but we in-house do above that and beyond that to ensure that our customers can have faith in our platform, and that obviously that the business can continue to grow without stressing the platform.
That's amazing. Also, like I'm thinking about volatility, right? Like there's a different kind of stress test, and you need to build a platform that just doesn't survive to the wild market swings, but also earns trust through users. And I want to talk about community right now. So it's either like how I want to ask how Wireless responds to the volatility. It's either a product side or it's more like how you communicate it with the users or how you're building the community.
Yeah. So, you know, we have social platforms and other platforms, and we've had that for many years. I think like all firms, we try our best to communicate as much as possible, but sometimes it's really difficult to get a message across. So we try multiple platforms, multiple communication methods, but ultimately the consumer would need to hear what you're saying. So we have to make the message compelling enough. I mean, at the moment, you know, it's so easy for messages just to get lost in a lot of noise. So we try and focus our communications based upon what we think the customer wants and the feedback we get from the customer as to what they want as well. So, for example, if you go on our website, you'll be able to see any expected downtime. You'll be able to see how our platform is performing. That's all freely available. But what I want to do going forwards is create more transparency, create more transparent communication. Again, to build trust and to maintain trust. I think it's really important, especially in our environment, in the crypto space, where we want to um, we want to have an approach that's democratic. It's really important then to make sure that you are transparent in your communications. And there's more work to be done. I think we're doing very well, but there's certainly more we could do. But I believe that compared to other firms in our space, we are far ahead of that.
Mm. No, but still, it's really good that you bring all these outcomes so like people know how Wires is built. You guys are building Wires. That's really, I mean, that actually is bringing me trust as well. So wanted to add like maybe something more technical, but like more than technical is like disruptive. So it's like it's about this AI, this AI component. So I feel like AI is changing how we manage risk and how we detect fraud or like even personalized finance. So I mean, what I try to build with ChatGPT or other platforms is like maybe bots that can tell me like what time or maybe when a new coin is gonna well, alerts or maybe about news and regulations. And so I'm thinking like how AI how Wireless is integrating AI, or is this something still in the horizon?
Absolutely. I mean, as you would expect, we do have an AI strategy. We've had it for some time. And the strategy centers on efficiency, and it centers on protection. So we do utilize AI across a variety of our processes at the moment. We've had some notable successes in that space that saves a lot of time, saves a lot of effort, but actually the outcome is just as good as we want it to be were it a manually driven process. But we also want to make sure that we treat AI with an element of caution as well. I'm a great fan of utilizing AI, but I want it tested first of all. I don't want any hallucination built into our platform. I don't want AI to drive our thinking. I want it to contribute to our thinking. Ultimately, our business, as we touched on, is heavily regulated. It will be more so regulated. And therefore, human intervention is absolutely key in certain areas when we onboard a complex customer, for example. But we utilize and we will continue to utilize AI to build a picture, allowing the decision maker to make good decisions efficiently and that can then be demonstrated if challenged. So for me, AI is a useful and incredibly useful tool, but unlike others, I refuse to see AI at the moment as the final answer. It's part of the solution rather than the solution itself. There is much more work to be done in terms of trusting the output of AI. There is much more work to be done also in understanding how AI can adversely influence your business through bad actors, for example. So there are many tools that we currently deploy and will be deploying that involve AI, but it needs to be done in a safe and sustainable way.
Amazing. Thank you so much for that. I totally 100% agree on that. I also see that I mean, it helps us in our day to day, but sometimes also it leads to fake news, you know, the fake images that are around there, or maybe the updates, like they have like misinformation. So sometimes when we ask about like, okay, what's tell me about Mika's new regulation, like they got like some not updated news. So yeah, that's something that we need to focus twice, definitely. So now we're talking about the future. I wanted to ask you about the roadmap for Wirex in the next year or maybe two. I don't want to go for 5 or 10 years because you know things are evolving all the time. But also I want to know how like this roadmap it converse like yeah, converse with the future of crypto too.
Yeah, so it's going to be very exciting for the next 2-3 years. There is great innovation underway in Wirex and across the entire business. I think there is more innovation coming along as more and more people adopt to the realities of change and the benefits of change. I think we're going to see larger companies getting involved, supporting medium-sized, smaller companies such as ourselves to really push that forward. But there's also lots of regulatory change coming down the line as well. So we need to make sure that we are focused and are able to adapt to that, and where required, try and challenge some of that thinking that's happening with certain regulators. So I work to three pillars, and for me, each pillar is very important. Obviously, we have the commercial pillar. We are a business. We want to make money. We want to contribute taxation to the economy. We want to employ more people. Obviously, that's a big part of what we do. But obviously, we want to make sure our second pillar, which is the consumer, that what we do is benefiting the consumer. So we need to understand where some of the friction points are for certain consumers and how we can adapt our model to help that segment as well. And we want to make sure our consumers are treated fairly, that they have trust in Wirex, and that they then continue to do business with us. That's obviously important. And the third and final pillar is compliance. Yeah. The first two pillars are great, but none of those would matter unless we can build trust with our regulators. We can demonstrate to the regulators that we are doing what we need to do to meet their requirements. Now, we may disagree with their requirements, and we can have those quiet conversations with the regulator in the background. But nonetheless, if we're hit with a particular piece of regulation, then we are obliged to comply with that. So it's very important that we also keep one eye on changing regulatory environments. So those three pillars, they work together, and if they work together in the correct fashion, which I intend to make sure they do, then we will have a safe and sustainable business, because that's ultimately the main aim. But taking into account the next 2-3 years, there's a lot that's going to happen, and our roadmap adapts to those constant changes as well.
Wow, that's amazing. And please, can you tell us what are the trends that you're watching closely? You can say like maybe technology, or I mean, I'm really focused on AI agents right now, but like maybe you got something different.
Yeah, so we partner with a number of third parties that assist us maintain our platform, maintain our regulatory adherence, and we are constantly in conversation with them in terms of what more do we need to do? What else can we do? So we've already touched on AI, for example, and that's a clear focus for us as well as our partners. And our partners are, companies that help us onboard customers, companies that make sure we screen our customers, et cetera, et cetera. And then we have other partners that we're currently dealing with. So we are principal members of MasterCard and Visa. We are talking to them continuously about new product innovations that they're coming out with and how best we can integrate those innovations as well. And then I mentioned earlier about stablecoins. Now, for I think that's a huge market. I think the demand for stablecoin, the demand for frictionless movement, the demand for cost-effective movement of funds is there, and we want to make sure that we build products and services to meet that demand.
Well, I really like all these ideas, what you're bringing about Visa, MasterCard, and also the stablecoin market. I see like there is a lot of huge opportunity. This is like one last question is like mostly that you're talking about stable coins. So in what countries or regions do you think like it's more needs of that, or something that you see in that platform maybe?
Yeah. So I see in particular two high level use cases. The first use case is, if you like, a small business, but that operates in multiple jurisdictions. At the moment, that small business is somewhat constrained in how funds are flowing between its suppliers, its vendors, its staff, and so on. And it's a costly flow of funds as well, because they're using traditional rails. So I see stablecoins as a means to support that small business, as a means to make sure funds flow is cost efficient, but just as fast as well. That's one use case that we're looking at, and that we've made some inroads in. Another use case that is very close to my heart is individuals who do not simply do not have access to traditional banking facilities. Those typically are in nations that still have developing economies, or that have economies that are incredibly inflationary. Now, those individuals are currently are currently expected to somehow have enough funds to manage major inflationary pressures against them, or alternatively have the ability to move funds when there's no banking rail or banking branch or whatever you want to call it in sight. So again, stablecoins is an ideal solution for those emerging economies and those stressed economies. I'm happy to give you one example. So in South America, there are certain countries where inflation is running at 20+%. Today, you buy a loaf of bread, you don't know what that loaf of bread is going to cost you tomorrow, because the local currency fluctuates vastly. With stable coins pegged against a more stable currency, you know day in, day out the value of what you have. And more merchants are accepting stablecoin payments through their Visa or MasterCard, for example. So that's a market that is very close to my heart, because I think that's something that traditional banking and regulation has completely failed. It's failed to support those consumers most in need of stability, financial stability. And there are many, many millions of people out there who currently face that instability.
That's amazing. And thank you for bringing that example about it, about South America and also other countries in Africa as well. And maybe like other countries around Europe, like Eastern Europe, that they also adapted crypto. I feel like not just the stable coins, but maybe that's like one of like the big use of crypto in the world. Like I was living in Argentina in 2019, and I could see people using crypto on a daily basis just for buying flowers or just paying for university, because as you said, the bank system failed to them. So it's wow, seeing that really impressed me. Yeah. So well, thank you so much for your time. Really, I want to know like before we wrap up, I want to know like where people can go and follow your work, or maybe up to date with all the Wirex updates.
Yeah, absolutely. So we attend multiple conferences, multiple events. I forget that the next one, there is one coming up soon. I'm sure my team can forward you the details. Otherwise, people can follow us on X, on TikTok, on YouTube. We are on all socials. But look, ultimately, the message I'd like to leave with people is that, Wirex and companies like Wirex, where we are innovating and we are supporting what our consumers want. And, we would love to tell you much more about what we can offer you and the solutions we can offer as well.
Yeah, definitely. Still, don't forget that after, well, with this interview, we come out with an article as well, so you can check more about Wirex. And 100% sure that the next event that you guys are gonna be in is ETC. That's gonna be in Cannes over next week. So that's I mean that's a really big win, because that's one of the biggest conferences in crypto or blockchain around the world. So it's happy that you guys are gonna have a big presence there. Same as being crypto. I'm also gonna be there. So thank you so much. I think we all learned a lot about this. Not just regulation. I think we started talking a lot about it, but I really like that you also brought your perspective as a CEO of how to build a resilient platform, how Wirex is evolving, not just in the infrastructure, but also like in the human side. So that's amazing, and congrats for that.
Well, thank you very much. It was just a pleasure speaking with you.
Thank you. What stood out in this conversation with Chet is that trust, resilience, and responsibility aren't just buzzwords for Wirex, they are design principles. So, as the crypto space matured, it's not just about surviving regulation or adding new tech. It's about building platforms that people can count on, especially in times of uncertainty. So, if you want to hear more about Wirex's direction under his leadership, including how they're using AI, please make sure to follow them in the link in the description. So thanks for watching, and see you next time.